Hey guys, you've tuned into Moneycontrol. I'm Manisha Gupta, and we're talking about the gold prices today, which have seen a bit of a setback, even some profit taking after the US Fed meeting. Well, the markets were anticipating and had factored in a 75 basis point of a rate hike, and that's exactly what you got. What the markets didn't factor in was that the US Fed could continue to be hawkish. Well, the US Fed chair did say that this is very premature to think that the rate hike is done. The inflation is stubbornly on the higher side, and there could be, there is going to be no pause in the further rate hikes, and you could be looking at a higher rate hike in the next month as well. December is when the last meeting for the US Fed will happen, and there is a 62% of a probability that you might be looking at a 50 basis rate hike, and there is nearly 40% of a probability that a 75 basis rate hike could happen in yet again. The inflation, as I said, has been stubbornly high, and the US Fed will continue to watch out for various economic data as cues to see on what really could happen in the month of December. 112 is back for the US dollar index as well, and that seems to be putting some pressure on gold. And when you look at the gold range for this year, it has been a high of $2,050 per ounce, but we also have seen a 2 year lows of $1,615 per ounce as well, and we're not too far away from there. $1,680 per ounce has continued to be a very stiff resistance in the near term for the gold prices. The good thing is that 1650 or 1620 on the lower side has held as a support as well. It promises to be a volatile next few months for the gold prices, even from here on one side, it is going to be about the rate hikes, but on the other side, it's going to be about the recession fears and global inflation, which holds around 40-year highs for economy like UK or for US as well. And that's exactly what the markets will be featuring on. Having said that, when you look at the gold demand, and that is what is shown by the World Gold Council report that came in, it shows that for the third quarter, we've seen gold demand 28% higher as compared to last year. In this year as well, the gold demand has been quite strong at around 18% as compared to the previous year. So those are some positive numbers. Well, yes, we have seen investment demand decline. The gold ETFs have continued to see redemption as well. But when you look at the physical buying, when you look at the central bank buying, when you look at the jewelry buying in the global markets, that has continued to be very positive as compared to previous year and as compared on a quarter-on-quarter basis as well. For the Indian markets, the physical buying has been quite strong. This is going to be wedding season now, starting from the month of November until the month of Feb. So the physical buying is expected to be on the stronger side. The global central banks have continued to buy gold, and that gives you assurance in the sense that there is banks buying gold. So there is some positivity, even encouragement going forward. Most of the experts and global banks and brokerages that we have spoken to also say that these are good accumulation levels for gold. We might see 1590, 1580 as well on the lower side, but once the rate cycle has peaked out, that could be somewhere in the middle of 2023. That is when you will see the gold prices start to behave better. 2024 could be a better year even for gold and silver, both of these. So good buying opportunities, especially for the Indian jewelry companies as well as we get into the wedding season. This is the time that India continues to buy gold. For the global markets as well, as we near Christmas and New Year, the gold buying, the physical gold buying there as well picks up. So there are some reasons for you to go long in gold for your portfolio as well.